Hi everybody, I'm Adi from Tabuki, and I'd like to discuss today just a few roadblocks that we could drive more mass adoption to Ethereum blockchain by just unblocking them. So when I think about mass adoption, I actually don't think about a group of people who are the masses, but rather about my Dan, my neighbor, or Hadar, my colleague, or my dad, because when we really want to architect and plan all sorts of platforms and protocols, thank you, for the masses, then we need to think about them and where they are right now. So where they are right now is at Web 2. They're using the internet for like 2 decades right now, and we need to architect, or perhaps we should architect, products that are Web 2 user interface, which are very, very familiar to this audience, while enhancing all the Web 3 advantages. So this would mean that for my dad, in order to onboard or to just download a dApp, he needs to have a very easy onboarding experience. That's number one. Without an easy onboarding experience, he won't move on to the next thing. But the second thing that I want to emphasize in this talk today is about the security. If we're going to talk about DeFi and financial transactions, then my dad and my neighbor need to have the same levels of security that they have using the current banking system. And the third, obviously, is they'll be able to learn and get exposed to all the magnificent advantages that we have to offer through decentralization, but that would be the only learning curve that they would need to implement and adopt to. All the others should be just intuitive for them. So, the masses usually come when there's a killer app, and we could argue that maybe we're on the verge of a killer app. Compound, for example, offering 12% on your crypto on an annual interest rate, whereas my dad is just receiving 1% for his bank, from his bank. So the question is, why aren't the masses coming in, taking their fiat, moving it into crypto, and investing it into Compound? One of the answers could be that it's just they're not coming because it's just too complicated. Now, the first thing that we did at Tabuki was we looked at the user experience, the onboarding. Just you want to go down and download a dApp, download Compound's dApp, and you need to undergo probably like 5 to 7 stages during the funnel. You need to open a Coinbase account and pass KYC and AML, and that could take weeks. And they're used to just going and onboarding quite easily. And what we understood is that we really need to unclog or unblock that roadblock before moving on to security. So what GSN does is, everyone familiar with Gas Stations Network? And thank you, Leighton, from Pool Together, from saying that one of the major milestones for Pool Together is just integrating with Gas Stations Network. That's just, it's very heartwarming because we did develop this for the community, and we're glad that they're implementing it. So it just enables dApps to easily and immediately onboard new users, and we've really received a lot of recognition from the community. We received a grant from Consensus, thank you very much, and from the Ethereum Foundation. We're collaborating with MakerDAO, and also we've formed an alliance with Open Zeppelin, Portis, and others. And that really just took the whole issue of having to have Ether once you want to onboard yourself. So I just want to download an app, and I needed to have Ether. So my neighbor, for example, if he wants to download Compound, he needs to have Ether. But he's a new user, and he's not familiar with Ether. And the Gas Station Network just enabled any user to get onboarded, even if he's Etherless. And our extension, which is the sponsor model, even enables you to just come in with any token, be it DAI or anything else. And also the dApp, the developers themselves don't need to change any mainnet smart contract code. It just changed something in their app, and they're good to go. So these are the kinds of projects that we really want to kind of motivate the community to go into, infrastructure projects that will be able to onboard mass adoption. We at Tabuki, the next thing that we saw, which is quite a paradox and maybe is something that we also need to unblock, is the user key management problem. Our co-founder Liraz, 2 years ago, he architected the security for a custodian, a digital asset custodian here in Israel, and he came across the problem that we all came across and saw, which is there's a paradox in our key management process. If we make fewer copies, it'll be harder to access, but then it's more likely that it'll get lost. And if we make more copies, it'll be easier to access, but then it'll more likely get stolen, just like this guy. So he's a journalist from BBC News, a tech journalist, and he obviously lost 25,000 pounds. It's not the first article that we've seen, but what he did is he wanted more copies, so he made a copy in his Gmail account, it got hacked, and the money moved to Binance, and from there onwards. So we're seeing that more and more people are really, they can't really, there's a lot of vulnerability involved in managing their keys, and that's, everything good? And that's kind of complex for them. So for my neighbor, Dan, I would say two things. Listen, Dan, it's great to trust yourself and be your own bank. That's what we're all about. But what you need to do is become quite a key management expert. You need to have a very, very long learning curve of getting into it and really wanting to do it, but there's no reversibility, meaning that if you lost control over your keys, then that's it, your crypto is gone. So this is not a very welcoming user experience for most of the newbies coming in. The second option I can give Dan is just to trust his custodian. He's already trusting a custodian today, right, his bank. But then there's a high incentive for hackers to attack, because if we all pull together and put our crypto in one place, there's a central point of failure. The attacker has a high motivation and high incentive to attack, and that's why we're seeing all these things like the Binance hack or the South Korean exchanges hacks. And actually the hackers are sometimes like North Korea, like nation states. So it's not a fair fight. And the thing is that for Binance, or for the custodians themselves, they also have the key management paradox problem. So this is why we're seeing all these vulnerabilities. Now, security is only as strong as its weakest link, meaning that when we want to architect a secure platform or protocol, we need to think about it end to end, because once we have a weak link, then that vulnerability will get hacked. So this is something that we kept in mind when we architected our protocol. And as I said, also, in order to make sure that the incentive to attack increases as our crypto increases, then we need to scale security to be stronger than the incentive to attack today. If I can take in $40 million worth of crypto or $100,000 worth of crypto just by stealing your private key, that's a very high incentive to attack, but it's not a high cost to attack. If in order to protect 40 million worth of crypto, I can have several multi-layers of protection levels and safety nets, then that would increase the incentive to decrease the incentive to attack. So when we're approaching security in our space, we need to think about just the same user experience that you encounter with your bank or your credit card. If I were to lose my credit card right now and someone would use it in Peru, I'd probably get a phone call from someone from the credit card company saying, listen, we've suspected some malicious transactions going on with your account. And I always know that even if I lose the plastic, or even if someone reads off my numbers, I'm still having the same level of security. And the credit card companies have their incentive in order to watch my back. But we also want to offer our users additional layers of security. So if these are businesses, for example, and you want to transfer from your account today, for example, if I want to transfer $10,000 or over from my account to another account, then I usually have verification calls and other verification methods to make sure that that was my intent. And that's all about Tabookie. Tabookie, we developed our protocol called Safe Channels, and it takes the same practices, common practices that are used with banks and credit card companies, but applies it in a decentralized ways using a smart contract. So the Tabookie protocol essentially enables any crypto holder or digital asset holder, it could be other digital assets, to not lose control over their digital asset, even if they lose their private keys or if they get stolen. So this would mean that even if I would show you my private keys and you would write it down and try to access my digital assets, you would not be able to take control over my assets because of the certain way that we architected our protocol. And essentially what we did, I'm going to keep it high level, but essentially what we did is we're introducing something called a safe channel, which is a smart contract. And that smart contract is solely responsible for letting any transaction pass through. So my crypto would be stored in a safe channel on the blockchain. And in order for me to move crypto from my wallet to another wallet, the safe channel actually connects my brain's intentions or my body's intentions to the digital asset itself. It's all decentralized, it's end-to-end security, and there are no central points of failure. So what we did in order to make this happen, occur, and in order to allow reversibility to our transactions, we introduced a time delay. This means that if I want to trade now crypto and I need to do something in real time, I need to pass my crypto to another wallet in real time, then Safe Channels is not for that use case. But for all the other use cases involved, then you could suffer or trade off the delay period, the immediacy of the transaction, in order to enjoy all the safety nets that I was talking about. So essentially what the delayed transaction would do is we would publish a delayed transaction, meaning that there's a certain transaction on chain that is saying that within 24 hours, 10 ETH is going to move from my safe channel to an external wallet. Okay, so it's going to be on chain. And the nice thing about it is because the censorship resistancy property of blockchain, then anyone who is monitoring my safe channel, my wallet, or my crypto will be able to see that this upcoming event is going to take place. And then if they want to check it out or see if it's suspicious or malicious, then they have the adequate time to do it. It could be 24 hours, it could be 5 hours, it could be a week, whatever is necessary and whatever policies I applied. The next thing we introduce is that bank or that bank executive or the credit card company, whoever is going to watch my back, because I may be lying on a beach, sipping a nice cocktail, and someone's going to take control over my keys. And usually when we find out that we lost our crypto, it's irreversible. It's immutable. We can't have it back. We can't tell anyone, listen, can you reverse the transaction? Whereas here, I could be on the beach sipping a cocktail, and someone will call me up. This would be my guardian. My guardian, if this is Dan, my neighbor, then my guardian can be his friend or his family member. But also, the guardian could be a security service provider who is monitoring my wallet and making sure that there are no malicious transactions or no transactions that are not on my daily routine. And this guardian is incentivized in a way that if they can only catch the bad transaction during that 24-hour delay. And the way that they catch it is they just need to initiate an intention verification process with me, call me up, or be in the same room with me, or use AI technology in order to make sure that they reach me and they know that my intention was to move that 10 Ether. If I were to tell them, no, it's not me, they'd be able to revert the transaction. So they're not able to initiate a transaction, but just revert a transaction. The nice thing about it also, so this is how they're reverting a transaction. The nice thing about it also is that I could have a multi-layered hierarchy or scheme of guardians, meaning that I could have two guardians who are overlooking my transactions, but then I could have another guardian on top of them. So if they're conniving against me or trying to steal anything that has to do with my crypto, I can still have, they can't really do that, but I can still have additional layers of security. So this means that if I'm going to hold $1 million worth of crypto or $500 million worth of crypto, if I'm in exchange, I would rather have a multiple layer of guardians. And this, the guardians would not be able to know about each other, but everything would be published on chain. In short, Safe Channels just offer users and also companies and corporations alike just the ability to have expertise-free security. Just like I know nothing about passwords and nothing about private keys, and I can still access my bank account. The customer journey that we're providing today means that if I were to lose my password to my online bank account, I would lose my account. This is just unheard of in the Web 2 user experience, and this is what we want to provide in Web 3, the same level of security. Everything is reversible, everything's okay. I've lost my Gmail password and I forgot it for like 50 times in the past 10 years, and I still have access to my Gmail account. This is the level of user experience, but on the one hand, but security on the other hand, that we expect to receive. So intention verification is a very known and familiar process that all the users know of today. Reversible transactions. We know that the blockchain is immutable. That could be brutal. And the very fact that I can trade off and wait 24 hours until the transaction will take place enables me to enjoy lots of safety nets when accessing my crypto. And also secure recovery, I didn't talk about that, but we have a whole recovery of passwords in a scenario in which I lost my password. These are the kinds of infrastructure plays that we like to see more in our ecosystem because we really feel that it contributes to all of us. And if you're a dApp developer and you haven't integrated into GSN just yet, then please do. It's free for the community, and it really makes the onboarding much more easy. And I hope that we can also integrate with a better security scheme for all of us. Thank you very much.